Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a reversal zone trade here on gold. Now this reversal zone here, we're looking at buying here at 1286.2, which we actually just bought. Stop is down below 1284.8. Now let's take a look at why we're interested in buying this area. So this location in this gigantic green candle right here, this was the GDP news that came out at 8:30, and it was a very, very bullish move that we saw here. Now all of that took place right from here. So as soon as this 8:30 candle closed and 8:31 technically started, or when the news came out, we had this just absolutely gargantuan move higher. That actual move itself was a total of 113 ticks. Now, typically one of two things is going to happen. When you have these huge news numbers, a lot of times what you're going to see is a big push up, a little bit of consolidation, and then another push higher. Now, the other thing that has a chance of happening is you're going to have a big push up, consolidation, and then it breaks right back down to revisit those lows. Now, think of it in terms of if you were a buyer on this news number and you bought down here at the open of this candle when that news came out, where are you going to defend? Well, your stop is going to probably be below this area here. But when we come back into that location, the buyers are going to aggressively defend that area. That's where they hopped in on the initial trade for this news. And if they miss some target that they had up here, you know, whatever happened, it's 113 ticks of potential right here. So we just tagged that area again, and now we're filled at 1286.2, and we're rising right back up. And this is exactly what we want to see. Now, this is a very aggressive trade, but the risk is very small. We're in at 86.2 with a stop at 84.8, so that gives us a 13 or 14 tick stop, so not very big at all. Now, typically on these types of trades, you're going to bounce off of this level a couple times, but the big thing is as long as you don't see a candle close underneath here, and it's all just wick, you know that you're good to go. Now, typically when you have a candle close underneath here, it's going to stop you out anyway. And again, we're only risking, 12, 13, 14 ticks or so. So the risk definitely is not very big. Now, it is a little bit larger than we're used to, so we're only going long here 2 contracts, plus it's an aggressive trade regardless. But looking at the trade, where can we look to place our targets? Well, our targets can go a couple different places. First of all, you do have the news candle, which is what this entire trade is based off of, which you'd be looking at about 50% of that news candle. So the overall target would be here at 1291.9. So we'll just draw a line right on there and make that a little bit bigger so we can see it. So we're looking at 1291.9 is going to be the target. That's the 50% move. Now, typically with these types of trades, you're going to expect a move up to 1291.9 and possibly all the way back up to these highs again, but that usually doesn't happen until the afternoon. And at this point right now, we're still early in the morning. We're not even at the US Open yet, so we're at 9:25 in the morning. So a little bit, we can't expect a full move all the way back up here quite yet, but we can expect at least 1291.9 as the halfway. Now, what we want to do is we want to take one contract off at 2-to-1 risk reward. So right now we're at 86.2 down to 84.8. So what we can do is we can actually just make this really easy and use a retracement tool. Go from low back up again, and instead of stopping here, remember we want 2-to-1, so our target's going to be up here at 1290.2 for the first contract. Now we're going to go maybe a couple ticks ahead of that, but we're really just looking at that 1290.2. We'll go to 1289.8. Now that's going to be 2-to-1. So looking at the first target here at 37 ticks. Once we can lock that 37 ticks in at 2-to-1, then we're essentially just going to leave the stop down here because this is more of the protective stop. This is a hard stop. If price gets down to here, we want out. And this is just more along the lines of price action. This is where you're going to see that kind of stuff. But if price does come down to here, we're just going to be out of the trade. Now the overall target's going to be up here at 1291.9. Again, a couple ticks ahead of it. So instead of 91.9, let's go to 91.6. So that's going to be the secondary target. And then if you had a few more bullets in the gun, in this case we've only got 2 contracts, so we'll have to stick with this, but you could be targeting all the way back up to here at 96.7 to 97.5 or so at those highs. So this trade does appear to be working out pretty quickly, but we're going to be back in a little bit just to give it some time to work out. I'm not going to expect this just to rocket back up, but it's working out perfectly, so it's exactly what we were looking for it to do. Now again, if we see price come back down here and close back underneath this level, even if it doesn't hit our stop, if we close under here, that's more than enough than we need to see to close the position. So we'll be back in a couple minutes, and hopefully we can hit that first target here at 89.9 in a little bit here. All right, so just filled that first target there at 1289.9. So now we've got locked in 2-to-1. Let's adjust our stop really quick just for one contract now. Nope, just for one. There we go. Because we're only long one now. So our protective stop is still down here, looking at a 14 tick stop. But in reality, we've already banked into this first target 37 ticks. So let's just put plus 37 on there. So even if we do get stopped out, we still make a nice chunk of change on this trade. But looking at plus 37, not really a good place to put this. We'll just put it over here. Now we're just waiting for this second area up here at 1291.6, just ahead of that halfway point of the news candle to get triggered in. Now this one could get triggered in the next couple minutes, or it could take a few hours. It really depends. A lot of times after you tag this area, like I said, you're going to come back and revisit those lows a couple times. As long as we don't see a close below those lows, we're good to go. So in this case, we'll be back in a little bit. Again, this could take, an hour or two before this actually gets up to that 91.6. Remember, you're looking at, 100 from the high to the low, you're looking at 126 tick range on this move. So even though it doesn't look like it's very far away, it is actually quite a distance away. Now, if we do go up and fill that target here at 91.6, we're looking at a 54 tick target on that final push there. So we'll give it a little bit of time to work out, and we'll see if we can get that final 54 ticks. But already banked in 37. Worst case, we lose 14 off that 37. We'll still be sitting up, a little over $200. So we'll be back in a couple minutes.
Order filled.
All right, and we just filled that final target after a little bit of fluctuation. We did come back to that area. It's exactly what we were looking for. But again, notice no candles closed underneath that low. So that's absolutely perfect. Nothing but wick down at these lows. So first target off at 37 ticks. Second target just came off here, and that's going to be, I believe that was 54. Yeah, so 54 ticks. So using our handy calculator tool, we got 54 and 37. We're looking at $910 or 91 ticks on the trade. It did take a little bit longer than I thought it would. Came out at 10:45. We got long at 9:25. So it took about an hour for this trade to actually complete. A little more than an hour. So not too bad by any means, especially for $910. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.